Good evening, guys. I'm Charlotte Chong, joined by Nadia Hassan.
Oi.
Welcome to Market Matters. Companies in the news today. Bursa Malaysia Bhd. It closed flat at 8.4 today. It's the world's biggest palm oil future trading since 1918. The news is Bursa fourth quarter earnings down 4.77% to 50.6 million ringgit. And the reason is it was higher OPEX in the country.
Yeah, exactly. So we talk so much about the market. Today, let's talk about the market itself. And Bursa Malaysia, right? It's one of those really funny businesses where I remember years ago, they were among one of the few to do a capital distribution because, of course, you have a lot of money and you can't go and buy another exchange, right? So they used to do that. So if you look at Bursa, in most reports will tell you this, Bursa is the safe kind of bet. It's the safest horse. It may not win you a big jackpot, but it'll win you somewhere in the middle of the road. The fact is, its largest portion of its OPEX is very, very interesting. Revenue did increase on the top line, but obviously this larger OPEX is eating into the margins, and that's why you saw the drop.
Well, higher OPEX, when I look at higher OPEX, is actually the staff costs, which form the largest portion of its OPEX, 14.23% higher at 37.69 million ringgit. Now, compared with 32.99 million ringgit ago, it's actually quite a lot of difference. Now, when you mentioned about cash generating capability, I remember Insider Asia picked Bursa Malaysia as stock of the day in September last year, and they say apart from strong cash generating capability, Bursa is a natural choice for defensive yield stocks.
Exactly. Why not bet on the house itself? You know in the old gambling saying, right, the house always wins. In this case, if you buy Bursa, you're betting on the actual house. So that's why they're having a final dividend of 18 cents per share. Full year total 2015 is 34.5% per share. I mean, it's pretty decent when you're looking at those kind of yields. However, when you talk about the market, you talk about the vibrancy of the market. Bursa's in this interesting position where, you have to have that balance. You do not want overly speculative market. Basically, you do not want Shanghai, which goes up and down on a whim and somebody's coughing. So but on the other hand, you can't have a completely defensive market. It's boring. Nobody's going to trade in it. So I think Bursa's in an interesting position where they are trying to get new derivatives. They're trying to get new platforms. Derivatives don't go beyond just warrants because warrants itself is a sophisticated, so-called sophisticated way of trading. So they are stuck in an interesting position. I don't know how they're going to build up revenues, actually.
Well, the thing is, right, this year our liquidity, it's looking at about average 1.66 billion a day.
Exactly.
Which
and
is lower
IPOs
than
have been pathetic.
2 billion for the average market trading day.
Yeah, exactly.
So I wonder if, foreign investors keeps pulling out funds, where do we see the liquidity coming? But having said that, Dato Tajuddin Atan actually say that despite market volatility and challenging economic conditions, they say Bursa has recorded a consistent growth in operating revenue over the past 5 years, and they say they will continue to manage their external factors by fostering greater market confidence in the market.
One word for you, it can be boring. The fact is, I will repeat that argument, you don't know. You need the mixture of the excitement, like you said, the liquidity, but you also need you also need that steadiness. So which game are you going to play? So yeah, these earnings are very reflective of that.
Yeah, so let's move on to our last segment, Brokers Call. Axiata Group Bhd. It closed 3.57% higher at 5 ringgit 81 cent today. Now, Axiata Group Bhd has controlling stakes in several countries, several mobile operators in several countries. Malaysia, operator has Celcom, under Celcom, Indonesia, Sri Lanka, Bangladesh, Cambodia, India, and Singapore. Now, today's news is XL Axiata is actually 66% owned by Axiata. They have a net profit of 51 billion rupiah in FY15. What did TA say?
So TA, we're looking at the two, right? TA and Kenanga. So TA has hold with the target price of 610. Kenanga's outperform. They are a bit more enthusiastic, but not that much off in terms of target price, 630, 20 cents, a bit of change. So the telcos have been very much in the news because after our wonderful recalibrated budget last week? Last Thursday. They are going to be charged for their spectrum. And get this, there's a lot of reports. I think CIMB, which we're not talking about today, but I saw this note. An extra 500 million to sort of manage your networks will actually shave about 3.9% off their target price for Axiata.
That's a lot.
Exactly. 4.6% off for Maxis. Maxis is still one of the more, active gainers and losers if you actually look at the list today. But yeah, so TA did say that, they see progress from the revamp Rise and reinvent. Sorry, I almost saw Revenant, and that's a movie with Leonardo DiCaprio.
We're going to catch
exactly
later.
Strategy.
Yes.
They did say it was actually quite good. They did say prepaid churns, which is of course the turning, is leveled off. The prepaid subscribers increased about 41.6 million versus the 41 million in third quarter. They do seem to see a kind of very, very solid growth for them, continual. But they did actually sort of maintain. They said, look, at this moment, we still haven't seen everything.
So what Kenanga said, Kenanga research is actually more positive on this company with a target price of 6.3. They maintain an outperform rating. They say the key negative culprit for the profit drop was mainly due to forex impact and taxation arising from the deferred tax payment, but they failed to achieve its top line target of flattish annual revenue growth. But moving forward, Excel probably has a meeting with all the research houses. They expect FY16 annual revenue growth to come within or better than industry average of about 10%.
Axiata is the only one of the three big telcos in the country that don't seem to be taking the spectrum hit as much because simply that they're overseas. They have a couple of things they're doing, and TA points this out, to sort of right their balance sheet. So the one is a rights issue of $500 million US, and they're selling, of course, part of the towers, those big tower portfolio. It's going to help them raise so much cash. The purpose of this is to do this outstanding shareholder loan. Once they get that I like that. I like that you still do housekeeping while at the same time you're keeping growth, because telco growth is very, very tricky, and it's very hard to balance it before it goes off into all-out price war.
Of course, talking about rights issue, right? Axiata actually expressed its intention to fully subscribe for any remaining shares that's not subscribed by other shareholders. Capital raising is expected to completed by the first half of 2016. Now, when you look at total debt, actually decreased to 27 trillion rupiah from 29.6 trillion rupiah. So I guess they are doing a pretty good job to shave its net gearing. Like
you said, look at the earnings, up 9 on the top, up 40 impressively. And I have a weird feeling a lot of that is forex gains as well.
That's all we have today. Thank you for watching. I'm Charlotte Chong, and she's Nadia.